Hey everyone, long-term care is one of those things that just about all retirees think about from time to time, but not many are sure what to do about it. In today's video, I'm going to break down 3 ways that you can pay for long-term care expenses. And towards the end, I'm going to share a tool that I use now, and I think everyone should know about it. You know, it's something that can really help with planning what those future care needs and costs are going to be. So be sure and stick around because it's completely free to use too. So a lot of people don't realize how likely it is that they're going to need long-term care. But the truth is that 70% of people turning 65 today are going to need some sort of long-term care during their lifetime. And nearly half of those turning 65 are going to need to pay for those services. Now, to give you some perspective here, the average driver only has about a 2% chance of being in a car accident every year, and almost everyone has car insurance. And the odds of your house catching on fire are just 0.03% statistically, but most homeowners still have insurance for that. So with a really high chance of needing long-term care, it's really important to plan for how you are going to pay for this. And, you know, while insurance, long-term care insurance specifically, is one option, it's certainly not the only option out there. There are multiple ways to cover these costs, and understanding each option will help you make the best decision for your individual and unique scenario. So let's break this down. You generally have 3 main options for covering long-term care costs. And yes, I do have a favorite that I'm going to pull out here in a moment. The first is Medicaid. Then you have long-term care insurance. And last, you have self-insuring, or just paying for it yourself. So let's take a closer look at each one and kind of go through some of the pros and cons of this, and you can start to formulate which one of these are likely to work best for you. So up first, we have Medicaid. You know, it's a great resource, but there are some limitations. So Medicaid is a government program that can help cover long-term care, but the requirements are really strict. So to qualify, you usually need to spend down your assets to a very low level, and even then, Medicaid may only cover certain facilities. So you're going to have fewer options of where you can get care or even the type of care that you can receive compared to if you were just to pay privately, either out of pocket or with long-term care insurance. Now, Medicaid is a great option for people that have limited financial resources, but relying on it is probably going to limit your control over your care in the future. And if, you know, protecting your assets or maintaining a higher level of care is important to you, you're going to want to carefully think about whether Medicaid is the right option. Now, I will say this, if you decide to go this route, even thinking about it, definitely talk to an elder law attorney, because that's going to help you avoid making some very costly mistakes. And if you want to find one in your area, you can go to the National Academy of Elder Law Attorneys, and you can use their Find an Attorney page, and you'll be able to find someone that's close to you. And then up next, we have long-term care insurance. Now, this is traditionally the way that a lot of people that are retirement savers have covered their long-term care costs. But over the last decade or so, it's changed a lot. Premiums have increased drastically in some cases because insurance companies underestimated how many people would need care, how many people would keep their policies, and then how many of those people, or how long rather, those people would need that care. And as a result, we started seeing insurers drop out of the market. So now we have fewer providers that are actually offering long-term care insurance. And the ones that do generally have stricter requirements, or their coverage has been decreased. Now, there's also the option that's come along recently of these hybrid policies, and these generally can, you know, have the long-term care insurance with life insurance or annuity, so it's kind of built in as a rider. So in that case, if you don't end up needing the long-term care, there's usually a death benefit. And that does give you some flexibility, which I understand can be appealing, but the cost of that rider is still generally really high, and not everyone's going to meet the health requirements for coverage on that. So long-term care insurance can still be a good option for some. It's just not as easy as it used to be, though. And then last, but certainly not least, there's self-insuring, which simply means covering the cost of long-term care entirely from your own savings and assets without relying on long-term care insurance or the government through Medicaid. Now, this isn't for everyone, but it is something that we do recommend to a lot of our clients. And the way that we approach it is just by factoring in the long-term care expenses directly into a retirement income plan. And our default assumption is just to use the last 2 years of the plan for the years that those expenses are going to be there. But some people do prefer to make that shorter or to make that longer. But however you want to do that, it's very flexible. But this way, when we're looking at all of the different scenarios of retirement that you could take to get your income, these expenses are counted in for the purposes of that big and very important will you run out of money test. And this also affects how we approach Roth conversions, since it could make sense to leave a balance in your IRA due to the tax deductibility of those future long-term care costs. Now, because of the limitations of Medicaid and the cost and other issues with long-term care, I have to face it and say that self-insuring is just how most people are going to pay for a good chunk of their care down the road. So the question is, how do you plan for that and figure out what long-term care will actually cost? Well, most modern retirement planning software programs out there will estimate these expenses for you. But here's the problem. They tend to use a national average, which probably isn't going to reflect the actual cost in your area because there's a wide variance here. So for example, in 2023, a private room in a nursing home cost about $6,692 in Texas. That's per month. But in Connecticut, that same private room costs $16,577 per month. So where you live plays a huge role in how much you're going to need to have saved for long-term care. And that's where this tool comes in that I was telling you about at the beginning of this video. This is the Genworth Cost of Care Survey that's free to use, and it's incredibly valuable. Now, I'm going to put a link to it in the description so you could play around with this some, but here's the way it works. They publish this annual report that provides detailed data on long-term care costs all across the U.S., and it's broken down by state and even down to the region. In fact, you can see the city where they gathered a lot of these results. Now, the location-specific survey here is broken into 3 categories. There's in-home care, assisted living, and nursing home. And this is important because most people aren't going to go straight from a no-care scenario right into a nursing home. There's usually a progression that starts with in-home care, then maybe moving to assisted living, and then eventually to the more intensive care of the nursing home. Now, if you plan for this progression, it's probably going to give you a better estimate of future costs by simply blending some of those. Now, if you're using software to help you with your retirement planning, you should be able to just use today's cost, and the software is going to handle the inflation. But if you're just curious or maybe doing this by hand, you can also use their future cost estimator and even change the inflation rate. So there you have it. 3 main ways to pay for long-term care costs: Medicaid, long-term care insurance, and self-insuring. And each certainly has its pros and cons, but no matter which option you lean towards, the key is to start planning now. Long-term care is probably going to be one of the biggest expenses you'll face in retirement. And being proactive in planning and knowing how you're going to pay for this is probably going to give you a lot of peace of mind, which I think is very, very important in retirement. All right, thanks for watching.